The global pandemic and the following economic downturn was supposed to be what popped the Canadian real estate bubble, causing a massive decline in house prices across Canada. And yet, many Canadian real estate markets are seeing an increase in sales and prices jumping. How is it possible with high unemployment and virtually no immigration, we're seeing the exact opposite of what the economic indicators say should be happening? On this episode of Bald Prairie Real Estate, I'm going to go over, are we currently in a real estate bubble in Canada? And is this going to pop, or are we going to see a continued expansion of that real estate bubble? Hey everyone, welcome back to Bald Prairie Real Estate. My name is Matthew Pfeiffer. I'm a real estate agent in Regina, Saskatchewan, but I'd like to be known as your favorite realtor on YouTube. So if you like being educated about real estate or want fantastic monthly updates, that's what I do every single month. I do real estate market updates on many cities across Canada, along with my awesome educational content. Go ahead, hit the subscribe button right now so you never miss one of those videos. But more importantly, you got to give me a like for this joke. So the other day I was on Amazon ordering some stuff. I ordered a chicken and an egg. I'll let you know which came first. This video is a viewer choice video. I put out a poll about a week ago asking what video you wanted to see next. And this one, why hasn't the Canadian real estate market crashed yet? That won in an absolute landslide. So that's what we're gonna go over in this one. But don't worry, if you voted for the CMHC mortgage default insurance video, that's coming out soon as well. So stay tuned for that. I've also been making a few adjustments here. So I want to see if you guys can spot some of the changes as I've been making them. I'm going to be adding a little different decor, making some tweaks to things. So go ahead, put in the comments below if you can spot the difference from this video to my last ones. But why hasn't the Canadian real estate market crashed, or are we in some sort of a bubble? That's what this is going to be about. We're going to talk about what's causing this increase in prices that we're seeing right now and a huge push in sales, how long this can continue with the other economic factors that suggest that we should be going the opposite direction. So we're going to go over all of that and discuss at the end of this video, are we in a real estate bubble right now in Canada, and should you be buying? So stay tuned to the end to answer that question. There are many factors that drive a real estate market. Supply and demand is one of the most important ones out there. It seems very obvious, but it really is one of the most important. And going into 2020, many Canadian real estate markets were chronically undersupplied and they had strong demand, pushing those prices up. And that hasn't changed because of this economic slowdown and the global pandemic. In fact, it may have exacerbated the problem, because when everything shut down and we saw essentially a pause in the real estate market, then what you saw is as things started to reopen and interest rates were very low, buyers returned to the market with that pent-up demand where they would have bought in the spring, now they're buying in the summer. And those low interest rates have driven them to be able to afford larger, more expensive houses, or it's enticed them to buy where they were sitting on the fence before. Because sellers have not returned to the market as quickly as buyers have, and new construction was basically put on pause as well, that supply-demand problem is continuing to actually get worse, and it's likely not going to correct in the next couple of months. We're going to take a long time to see that start to balance out. So supply and demand are a huge factor that's driving the current surge in prices, and the demand is buyers that were planning on buying in the spring that didn't because everything got put on pause. They're now buying in the summer and potentially into the fall here. Liquidity and in some ways low interest rates, those kind of go together. So I'm going to talk about them together in this section, but liquidity is basically how much money is available in the economy to be able to be borrowed or used. And the low interest rates is obviously the amount it costs to borrow that money. Going into the global pandemic, one of the first actions that the Bank of Canada took was to buy up massive amounts of mortgages. And they did this to free up the banks to lend out more money. Now, whether this is good policy or not, that's an entirely different discussion that I'm not going to get into. You guys can argue about that in the comments all you want. But I'm put up a chart somewhere here so you can see the massive spike in mortgage bonds that the Canadian bank bought up. And then what they did is they lowered interest rates to make it more enticing for consumers to go out and spend money, buy things, that type of stuff. Again, whether this is good policy or not, or sustainable, go ahead, argue about that in the comments. I'm sure somebody will win that debate somewhere, but that's not what I'm going to get into. But those two factors have had buyers who've been thinking about buying a house able to afford more, which in some cases allows bidding wars to happen because buyers know they can spend more. but it also encourages them to go out and buy. That's what the Bank of Canada and the government of Canada did want. They want people to go out and buy things to keep the economy going and borrow money and stuff like that. That's the activity that they're looking to encourage. So this surge in buying activity, you can say, as a result of the Canadian government pushing for that activity. But those low interest rates are historically low, so it's meaning people's payments are lower than they ever have been. They can either choose to buy a larger, more expensive house, or it costs them less to buy a house than they anticipated. So if they were sitting on the fence, not sure if it made financial sense, now it might, because those payments are lower. So liquidity and low interest rates is another huge factor that's driving this big push in the real estate market right now. We're going to way back a little bit to the supply demand question, and that is pent up demand. The spring market is always the most active part of the market in Canada. You see a huge push in sales activity, and generally prices go along with it. That typically will happen in February, March, April, and a little bit into June. It depends a little bit by market, how long that lasts and when it starts, but that's your typical months. That, of course, never really happened. The real estate market got put on pause for a number of those months, and so buyers that would have bought in the early spring ended up buying in June, July, and August. Essentially what we've turned into is a 10-month real estate market versus a 12-month real estate market. So buyers have to buy in a smaller window. That's causing this big push of activity that we've seen the last couple of months, and it is what's sustaining prices right now, because sellers don't have to discount their homes to get them sold, because buyers who are planning on buying are now able to buy, especially as the economies reopen and showings are available, inspections and things like that that couldn't be done a few months ago can now be done. So that pent up demand is pushing people to go out and buy right now. And because so many people are buying in a condensed period, that's part of why you're seeing these bidding wars going on in markets where maybe you wouldn't even expect them. My market, Regina, Saskatchewan, we haven't seen a massive amount of bidding wars in a long time, and that's exactly what we're seeing, because people who are planning on buying had now been condensed into a smaller buying window. So there you have the factors that are driving the real estate market currently. Of course, there's other ones, but those are the major ones to look at. Now let's talk about, are we in a real estate bubble in Canada? And are we going to see it pop or a massive market crash later in the fall or into next year? Now, I don't have a crystal ball, so I'm not going to make predictions as to what's going to happen. But what I am going to do is talk about some of the factors that could play a role in that. There's a lot of talk right now in the media about this debt cliff and what happens when government assistance programs end and mortgage deferrals end. There's some speculation that it might cause this massive decline in the real estate market, kind of overnight type of thing. That absolutely isn't going to happen. First off, real estate markets take a long time to adjust to changes. So you're not going to see everything normal, hunky-dory, even like we're seeing right now, big surge of activity, and the next month prices are going to crash. That's not going to happen. It will take many, many months for prices to start changing. So if you're thinking, I'm going to buy in September because that's when prices are going to crash, yeah, it's probably not going to be true at that point. Maybe September of next year, you might see a big change in prices, but September this year, that's highly unlikely. And talking about those government assistance programs and mortgage deferrals and things like that, some interesting stats I've been reading, and the report's a little conflicting right now, so I haven't been able to get the full picture, and I think this will come out in the next few months. But the huge surge in unemployment, I think we hit like 13.7%, which is massive, one of the highest unemployment rates we've ever had in this country. But it was heavily skewed to part-time and younger workers. Those were currently not homeowners. That was actually very evident, and that many of those people that lost their jobs were not homeowners, they were renters. And they weren't planning on buying a house immediately or in the very near future. Those that continued to work, for the most part, were homeowners. So people that kept their jobs, although they had to tighten their budgets, but what we're seeing is they didn't lose their jobs or they didn't see massive reductions in their hours. But what about when government assistance programs end? Well, first off, from the data that I've been reading, those programs were heavily utilized by part-time and younger workers. So those were people that were not planning on buying or not able to buy right now. So when those end, you're not going to see all of a sudden a big drop in demand on the buyer side because they weren't probably going to be buying right away anyways. Okay, so let's get back to the original question, which is, are we in a real estate bubble right now? Well, if prices are going to see a massive correction in the next 12 months, yeah, this would probably be a real estate bubble right now because we're seeing prices increase and many buyers jumping at the opportunity to buy, which is continuing to push prices up. So we're seeing this big inflation right now, and obviously those prices are going to crash in 12 months. Yeah, this would be a bubble right now. But it's really tough to make predictions on what's going to happen because there's a lot of unknown factors right now. So to say we're in a real estate bubble right now and you should or shouldn't buy and all those types of things, that's really not accurate right now because you don't know a bunch of factors. One, how significant is this pandemic going to be? Are we on the tail end of it? Are we seeing a recovery? Are we in a little lull before a second wave? We don't know those things right now. And we don't know how significant the economic impacts are going to be if the situation changes. The other big wild card is you just don't know how committed the government is to continue to pump money into the real estate market or keeping the real estate market going. That's a wild card that you just don't know. So trying to make predictions is going to get skewed immediately as soon as the government starts to change policy and go a different direction. So maybe we're going to have a big market correction, and CMHC has been on record and extremely vocal about it, that they're expecting to see a massive market crash. And they said in the next 12 months, well, that prediction was made 4 to 5 months ago, and we've seen the exact opposite. So I guess we're going to have to see. And I am going to do in May of 2021, I'm going to do a review of that CMHC prediction and kind of see where the market ended up after all this. Another government wildcard, I guess you could call it, is how does the government plan on repaying the current debt that they've created with all the money that's been borrowed? There seems to be an indication right now in their existing policy that they want to just allow inflation to run a little hot right now. So they're going to essentially devalue the currency to make repaying debt in the future cheaper. And if they are going to do that, that obviously makes cash reserves far less valuable. So you're going to see investors start to go to other assets which tend to hold their value better, things like gold, but also real estate. If their cash reserves are going to be worth less, they're going to put in something like real estate where they think that those prices are going to increase, hopefully at the rate of inflation or even higher, to keep that investment they've got the same. So again, these are some wild cards that you can't really predict. And then at some point, the government's gonna have to reopen the borders. They're gonna have to reopen the borders to immigration because we need it to fill job vacancies, but we also need it just for the growth of the economy in general. So they're going to open the doors. Now, in an average year, Canada will let in between 250 and 350,000 immigrants into the country. So that's a significant amount of people that will come into Canada. And there's gonna be, just like pent-up demand right now for houses, there's gonna be some pent-up demand for immigration. There's gonna be a backlog and a bunch of new Canadians, that wanna come to this country. They're gonna wanna get jobs, get an education, buy houses, things like that. So when those borders reopen, you're likely going to see a big push in the real estate market. So even if we have a softening over the next year or so as this pent-up demand subsides, there is going to be that second push at some point to continue to push Canadian real estate assets. Another thing I hear a lot is people trying to compare the current situation in Canada to the United States in 2008. And you simply can't do that. That's two very different economic, political situations, and they're handled very differently. So trying to compare one to the other just simply isn't going to be accurate. You have a very different financial and banking sector in Canada and the United States. You have different economic and fiscal policies, government, social policies, all those types of things in two different countries. So it's really unfair to try to say, well, this happened in the United States in 2008, so this shows exactly what's going to happen in Canada. You don't know that's going to happen. You can't make those assumptions. And again, like I talked about in those wild cards, you don't know how the government is going to address those situations. What the United States did in 2008 might be completely different than what the Canadian government will do in the future. So trying to compare the two isn't really a fair comparison. Why then are we not seeing a Canadian real estate market crash even with all these negative economic indicators? Well, like I talked about, pent-up demand, supply and demand, low interest rate, and government intervention. As long as those continue, you're not going to see a real estate market crash in Canada. As those factors continue to be removed, or if they are removed, I should say, yeah, you might see corrections later on. But trying to make predictions as to what's going to happen, that's kind of a fool's game because there's so many wild cards we just don't know that you can't put in the equation right now. Things like government support, you don't know if they're going to extend those, they're going to add new programs, remove programs, stuff like that. You don't know how committed the government is to continuing the real estate market. There's a lot of wealth in this country that's tied up in real estate. So government that potentially is facing a re-election campaign right away here isn't going to want to see people's economic situations deteriorating while they're trying to go to the polls. So those types of things are going to absolutely play into that. Then begs the question, should you buy a house right now? Is now a smart time to buy a house? Well, of course, the real estate agent's going to tell you to buy a house, right? It's one of the most famous comments I get in the comment section. Well, I'm always going to lie to you or tell you that you should buy a house because that's how I get paid. Guess what, guys? That's not what I do in this channel. I'm going to provide education and information to you. I don't get paid if you buy a house here. I don't have any interest in perpetuating the market. I believe in being as open and honest. And if I felt it was a bad time to buy a house, I tell you that. If I felt it was a good time to buy a house, I tell you that as well. But buying a house isn't just an economic decision. There's a ton of different factors. Lifestyle, if you've got a growing family, if you've got a job change, things like that all play into whether you should be buying a house right now. All of those need to be weighed into the decision of should you buy. Now, if you're buying a house to live in right now, you're going to be there long term, so 5 or more years. You've got a stable job situation, your finances are all in order. Those are great reasons to be thinking about buying a house right now, because even if there is a downturn in the economy or in the market, your job situation will carry you through. And if you're going to be there long term, you should see prices start to rebound over time and you'll be okay. What about though if you're looking to buy for an investment? Well, that's a different question. I don't talk about home ownership for speculatory or investment purposes. When I do my videos, I'm more talking about people who are looking to buy a home for home ownership purposes, raise their family, that type of thing. Hey, look, here's a video, first-time home buyers. If you're a first-time home buyer, this video playlist is gonna have all the information you need to answer those questions that first-time home buyers have. But if you're looking for just more generic real estate educational content, this playlist right here has got all that. Thanks for watching, guys.